So this is, again, cycle analysis on the stock market, and we're looking at a 1 to 3 month view. So I did a comparison. If you're only just now tuning in on a clip that is only showing the stock market analysis, please be sure you go back and watch the main show or the clip on the analysis of the European markets, because in there we make a comparison, and it is suggestive of the fact that other markets around the world are in better shape than the U.S. And that's certainly about valuation, because the U.S. market has been brought up to a level of extreme overvaluation, historic, and at the same time other markets have languished, and now that looks like it's reversing, and that will give the U.S. market some problems and really favor other markets. So go back and watch that clip if you haven't seen it. We're going to switch here and look at SPY right now. So here is the great megaphone that's formed in there, as you could see, and we've been trading up at the top of that megaphone. Let's just get a little closer look in here, and you will see these cycle patterns that have formed in here. And now I've added something in here, and what I've added was the FEZ, because I wanted to show you what the top 50 weighted European stocks, how its rhythm in here lines up with the US market. So you could see this key low right over here. Pretty good, right? Now the US market had some shorter cycle patterns. When the decline came here in FEZ, you got this minor decline here in the US market. Now this big decline was in perfect alignment, as you can see, and then this decline right over here, which matches the S&P, it tried to rally but then stalled, and I couldn't quite figure out what this fake out was right over here, but now I understand, is it was led down by the FEZ, by the European markets, which then made their significant bottoms right over here. So now what's going on is that all the markets, all the equity markets are moving up together. Now, what we expect to happen is a pullback in here in the spiders, and that is sometime into December getting down into the support area, which is around, we'll call it 348, 347, maybe down to about 342 or 3, right down over here in December. So that is this minor cycle right over there, pullback. And you see the market is getting a little bit sloppier now. Even on good news about the vaccine, it's now having a hard time making any real upside progress after having these big Monday surges on good news out of Pfizer and Moderna about those vaccines having a very, very high 90 and 94.5% efficacy. Just fantastic news. And the market had this big upside gap 2 Mondays ago, and now you could see it's been just chopping sideways. So that's happening while the European markets are rising strongly, and this is what we think is part of this big rotation as investors look towards value, and value is not the U.S. index. It is the European indexes, and value is a lot of, as they see it, a lot of these beaten up groups that have gotten killed by the virus. So money is being swapped, and the U.S. indexes we think are going to struggle. Now we have a very slight upgrade in here, because remember, if you watch that analysis on the European markets, we talked about them holding up into this period of mid-January to early February. That takes you out up over here. So we have upgraded this slightly based on that, as this upward phase right in here comes in late December and into, we'll call it mid-late January right here, before this sharp corrective area where these yellow zones are, when the downside really takes a hold. And we talked about this being a big top that we believe is being built in here in the U.S. market, to be followed by, well, I'll say it again, in future markets, but a pretty negative period out there. So this is a little better picture of what we think is a range-bound market with still maybe some slightly higher highs out over here. When we're over here, we said it was a likely 3.5% upside versus a 20 to 30% downside, and we haven't changed that much. I mean, just maybe up the upside of the range a little bit different, but this is what we think still is a big top that is being built in here. But no reason to talk about anything too negative when we're only looking for a decline down into this area over here, which is just a small percentage drop and then moving up again, maybe 3 to 5%, and then coming up again. So we think we're in a period where we're going to continue chopping and then get a little bit of a slap going on, and then move up the higher highs over here, being led by the world market. So supported by a very, very different market or different markets or stocks than it has been before. Again, we think that the NASDAQ will underperform, and you'll continue to get overperformance by the Russell, and overperformance, we think, certainly by other world markets. Do go and watch that video that we just did where we do that analysis, and you're going to learn a ton about our cycle analysis. So this is that great megaphone forming, and you can see that we are at the top of that and likely to make only minimal upside ground looking forward in these next 1 to 3 months as we're projecting.